Hey everybody, welcome back. I know I said in the last video that would be, the last video, but I couldn't help myself. I had to do one more. So again, welcome back to the mind-blowing video series of tips, tricks, and strategies for income taxes. Again, I am your host, Tyrone Gregory, the peoplepreneur, founder of the actionfromsquare1.com website, where I prove that the impossible is possible. And I had to do one more video simply because during the tax season, there were a lot of confusion around this one particular type of taxpayer. So I had to do this for him. So if you are a driver for either Uber, Lyft, or the new Amazon Flex, which is not available in all areas, only in select areas, then this video is for you. But first things first, let me state this. If you are a driver for any one of these companies, then you are considered to be self-employed, which means that you are subject to self-employment taxes. And if you are unaware of what it means to be self-employed for income tax purposes, then I highly suggest that you go check out the fourth video in this series that explains all of that, so you will not be caught off guard. And please, I'm begging you, please do not succumb to the mindset or adopt the mindset of I'm just going to pay my taxes at the end of the year. And the reason I don't want you to do that is simple. If you owe the IRS more than $1,000 when you file your taxes, they are going to assess a penalty to that tax return. And trust me, as a self-employed individual or any individual, you do not want to pay more than you have to the IRS. So again, do not wait till the end of the year to pay your taxes. Pay it beforehand. Get into the habit of making those payments so you can have that perfect tax return so you don't have to pay any penalties, okay? So let's get into it. First thing I want to talk about is the independent contractor or the forms, for Uber drivers. If you drive for Uber, Lyft, or any one of these companies, the forms that you're most likely to receive is going to be a 1099 miscellaneous with the income in box 7. Now, depending on the type of contract you have with them, or if you do any other work for them, you'll receive this form. And then the second form you're possibly to receive is this new form, the 1099K. Now, this form is what caused a lot of confusion in both the taxpayers and with the tax professionals. Not a lot of people have seen it, don't really know what it is. There's a lot of boxes going on. But for purposes of this, I only want you to concern yourself with two boxes, boxes 1A and box 4. Box 1A is going to be the full amount that you earn without any regards to fees, refunds, returns, or anything like that. It is the amount that is reported to the IRS, which is the amount that they are expecting you to report. However, it may not be the actual amount that you receive, but don't worry about that. Just report it, and I'm going to tell you, I'm going to show you how to adjust it later in this video. And box 4 is what it is. It's the federal income tax that you had withheld, either from mandatory or backup withholding. But if you do have an amount in there, make sure that you do report that. And if you didn't receive one of these forms, don't worry about it. I'm sure Uber, Lyft, Amazon, they have dashboards. You can go online and you can still check all of your income and all of your deductions so that you can still properly file. So that's the forms. The next thing is your deductions. As an independent driver, there aren't too many things you can write off, but knowing what you can write off will help you arrive at that perfect tax return and maximize your deductions. So the first deduction I want to talk about are your fees. I was able to find online a tax summary of what an Uber breakdown looks like. Now, not every Uber driver is going to have all of these line items on their breakdown, but I think this is just one that shows all possible breakdowns here. But what I want to bring your attention to are these two things here. We'll see here the total, the $50,000. This is the amount that's going to be reported on either the 1099 miscellaneous box 7 or box 1A of the 1099K. Also, it's total, again, 50,000. Now, this person didn't actually receive 50,000, but this is what was reported. But we can see here the Uber fee is 8,000. And we'll see other fees here as well. City fee, airport fee, split fare fee, safe ride fees, many type of fees on here. Once we've identified what the fees are, we can then deduct them on the Schedule C under commission and fees. There are many other things on here that you can deduct. Your tolls, which will be part of the vehicle expensive, any type of device subscriptions, fuel card charges. If you see anything on here in this breakdown that has a fee or some other miscellaneous charge, identify what it is, and you can deduct it on your Schedule C. And we can see the same here is for a Lyft driver. You can see they have the total payments in this section here. Then you have the Lyft fee for every drive. Lyft took theirs out here. So here's the summary ride payments. This is the amount that's going to be reported on the 1099 miscellaneous or the 1099K. But you can see here they have fees associated with it, which you can deduct. So the next thing you're allowed to deduct is your cell phone. These beautiful things here. However, do keep in mind that your cell phone is not 100% deductible unless it is used 100% for business, no personal use at all. If you're trying to figure it out, well, how much percentage do I use? I would say, as a rule of thumb, use what we call the business use percentage based off your mileage, in which I'm going to show you how to get to that in a little bit. The next thing you can deduct are supplies, which is anything that you provide as a courtesy to your passenger, like water. You know, hopefully on a hot summer day, you have some nice ice cold water available for your clients, or snacks that you provide. But keep in mind, if you charge them for it, you have to claim that as income. Another thing, Kleenex, right? Sometimes people have runny nose, things of that nature. But the greatest thing supply, which is what I think gets overlooked, are wipes. You know, people make mistakes. Accidents happen, especially late at night when you're picking them up from bars. I've heard about those big accidents that happen, which brings me to state also that if a big enough mess is made in your vehicle and you need to have the inside cleaned in detail, that's deductible as well. And speaking of deductions, we're now going to talk about the biggest deduction that you can have as a independent driver, your vehicle. Note, there are two options. You can either do an actual expense or the standard mileage rate. Keep in mind that these are two separate individual deductions. They cannot be taken at the same time. They cannot be commingled or anything of that nature. Also, please note, choose wisely. If you want to use the standard mileage rate, you must start with the standard mileage rate. In other words, you can switch from actual expenses to standard mileage rate, but you cannot switch from standard mileage rate to actual. So make sure you speak with your tax professional to discuss which option is going to be better for you. So what's the difference between the two? Let me first talk about actual expenses. And as the name implies, it's a list of all of your actual expenses: depreciation, lease payments, registration fees, licenses, insurance, gas, oil, repairs, garage rent, tires, tolls, and parking fees, all of your actual expenses. And yes, there is a formula associated with doing this here. Real easy though, and I'm gonna show you here. What you do is you take your business miles divided by your total miles, and that's going to give you what we call a business use percentage. But that's not where it stops. You then take your business use percentage and multiply that by the amount of the actual expenses, which then gives you your allowable vehicle deduction. Let me give you an example. So let's say here we have an Uber driver, and between January 1st and December 31st, according to the odometer reading, they drove a total of 13,000 miles. And of that 13,000 miles, 4,000 were used for business only. And in the course of that, they spent a total of $5,000 in actual expenses. So this is how the formula will be used in this particular scenario. We'll take the $4,000 divided by 13, which is going to give us our business use percent of 30.76%. So that says that they use their vehicle around 31% of the time for business. So now we take that business use percentage and we multiply by the amount that we actually spent. Doing that is going to give us 1,538, which is our total allowable deduction. Easy to fix, see? Also, note, now that we have our business use percent at 31% or whatever it would come out to be, you can now use that and apply that to your cell phone bill to get the amount of your cell phone bill that should be deductible. Second one, the standard mileage rate. It's the simplest of the two. It is a formula involved, but here's what the formula looks like. You're going to take the business miles and multiply it by the business mileage rate, which equals the total allowable deduction. Now, in order to find out what the mileage rate is, you're simply going to go to the IRS website, and I'll show you here. And when you in the search term, you're going to simply type in mileage rate. I'll show you, even though it's already up, and show you how I arrived there. Mileage rates. And when you type enter, you're going to see a few things come up. We don't want the 2014 standard mileage rate. So what you want to go to is the one that's standalone standard mileage rate. That's what's going to bring you here. Notice it goes all the way back down in 1997. Don't concern yourself with that. You want for the year that you're currently in. We are 2016. So I'm going to look for business miles. I have a number, 54 cents per business mile. So now I'm going to take that number and I'm going to plug it into my formula here. So this is the example. Here we have somebody drove for Lyft. Same scenario, 4,000 business miles, 13,000 total miles, 5,000 total expenses. But in this formula, we're simply going to multiply the business miles by what's allowed, 54 cents. And that is going to give us the 2160, which is our total allowable deduction. Notice that business use percentage has no bearing on the calculations. Very simple formula. And my rule of thumb, if the business use percentage is below 50%, then I would use the standard mileage rate. We can see it gives you a higher deduction. However, if your business use percentage is 50% and above, then I would, do the math, play around with the numbers and see which one would be more advantageous. And here's a note on mileage. Determining how many miles you have driven should be fairly simple. However, as you can see, based on this, here's the Uber summary again, what they report may not include all of the miles that you've driven. If we look here, it says on trip mileage, and note that little 2 there says 50,000 miles. And when we look at the 2, it states that this is just on trip mileage only. Additional mileage may be deductible, because what they don't take into effect or take into account is the starting point. They don't take it to the fact that where you started from to go pick up the passenger, and then from when you dropped off the passenger back to your starting point. let me simplify. From point A to B is deductible, and then from B back to A is deductible. But a lot of the companies don't take into consideration the trip between A and B. Only when you pick up the client. That's what they bill for. As we can see, Lyft does pretty much similar. They also keep track of the mileage for you, but may not keep those additional mileage recorded for you. So definitely keep in mind everything that you have done for mileage purposes. But let me give you a warning when it comes to tracking mileage. Mileage is one of the biggest risk factors when it comes to being audited by the IRS, because a lot of people just guess at their mileage, and it's an immediate red flag when things aren't accurate. The IRS states that if it is not written, it cannot be deducted. That means if there is no written mileage log, then by law, you cannot deduct any mileage. And as a Uber, Lyft, or Amazon, or any kind of independent driver, that is your biggest deduction. Keep in mind, the log does not have to be fancy. Simply just write down your odometer reading at the beginning of the year and write down your odometer reading at the end of the year. And every time that you go on a business trip, write down the mileage at the starting point of the business trip and write down the mileage at the end of the business trip. Trust me, nothing fancy. Good old pencil and paper works. I used to keep a notebook in the car, and I used to write the mileage on the back of the gas receipt and then come log it into an Excel sheet when I got home. But let's be honest. Well, I'm going to be honest. That keeping track of mileage is so tedious, and you don't keep track of every mile, so you're guessing, and it just becomes a nightmare. I can't even express my frustration with keeping track of mileage. However, there is a solution. I have a solution. It's funny, when I would teach the income tax course, and we would talk about the subject of mileage and deducting it, and how the IRS states if it's not written, then you can't claim it. And I would joke with my class and say, there's probably an app for that. But at the time, there really wasn't a good app that was developed for tracking mileage. And then something happened. I found it. So let me introduce you to MileIQ. If you haven't heard of it, oh man, you're missing out. I absolutely love this app. Of course, I have it. I use it. It is the most easiest thing to do. And here's why I highly recommend that you download this app. If you are an independent driver, if you drive for Uber, Lyft, or anybody, even if you are self-employed and you do a lot of driving, I highly suggest that you download this app. The first reason I recommend it, it's an app. Simply just download it on your phone. You can use up to 2 vehicles for each subscription. The second reason, the ease of use. Simply swipe right to log it as a business mile, or swipe left to log it as personal. How easy is that? And remember how the IRS says that it needs to be written? Well, you can send yourself a report right from the app. You can either get it as, I think, as a CSV file, which is like Excel, or you can send it to yourself in PDF. Easy, love it, very simple. I mean, no other peace of mind when it comes to being audited, knowing that you have all of your documentation right there. And of course, there's a lot of other things about this app that I love it, but I really don't want to get into a tutorial. I can share the link with you down below to go to their website, and they can show you a bunch of things, but it is the easiest thing to use when it comes to tracking mileage. And it's so important when it comes to tracking mileage, because I've seen a lot of people get dinged by the IRS for not having accurate mileage logs. Now, there is a cost associated with this app. It's free, but it's only going to allow you to track 40 trips, which For most of it, that's like 3 days to a week. So that probably won't work. But if you just want to try it out, go for it. It's free. Use it for 40 trips. Get used to it. It's good to go. But if you're serious about your driving and you're serious about being protected from an audit, then it's only just $59.99 a year, a very small cost, which, by the way, is an deductible expense on your business taxes. So boom, double bonus. Oh, and here comes an extra bonus for this bonus video. There is a referral link down in the description below that if you click on it and you decide to get this app, you will get 20% off your first year. Just tell them I sent you, click on the link, download the app, and get 20% off your first year. Again, I love this app. I personally use it. It is great, and it gives me peace of mind knowing that I don't have to keep up with all the paperwork. I don't have to do any tracking on my own. It simply does it for me. And in conclusion, guys, I hope that you really got a lot of information out of this video. Make sure that if you saw something you may have missed, you have 3 years to go back and check anything in your taxes. Do so. You now know what you can deduct. You now know your options. Go back and check it. Make sure nothing is missed. Make sure everything is maximized. You have 3 years to claim anything, so please do so. Secondly, homework. Well, seeing that this is a bonus video, I decided, okay, no homework. It's a bonus video, so we'll let it go this time. Again, no homework. You're lucky. And as always, if you need me, please find me. Don't forget to subscribe. Don't forget to give me a thumbs up. Don't forget to share this with your friends. The one thing about good information is hogging it all to yourself. So make sure if you know anybody who drives for Uber, Lyft, or Amazon, that they see this video and that they are not forgetting anything and getting their opportunity to file the perfect tax return as well. If you need me, again, shoot me an email, send me a tweet, find me on Facebook, or just leave comments below. And I don't think I'm going to make any more videos, but if I do, I would love to see you subscribe there. You can see them when I post them. Until then, you guys have a great day, and thank you very much.